There we go. Good afternoon, everyone.
Good afternoon.
Hope everything is all right. Welcome to another episode of Dollars and Cents. And we have with us here myself, of course, Wade and Keith.
Yes, I'm back.
Thanks for coming back, sir.
Oh, thank you.
We missed you last week.
No, you didn't. I saw the show. You guys were good.
Listen, we got our jabs. We got our jabs in. I'll admit,
Yeah, I know.
Well, it's online, so we did get our jabs in for you not being there. But shout outs to Hadriana, the money navigator, for being there and talking to us about setting goals, right? So just before we get in and introduce our guest here, I want to remind you all that our Facebook page is Dollars and Cents Team. That's the ampersand sign for and it's the same thing as well on YouTube. So we have a Facebook page and we have a YouTube channel as well. Go ahead, follow, like, share, subscribe. All right. Just leave a comment, or if you have, if you're a guest and you'd like to come, or if you're a person who would like to come on here as a guest, we more than welcome you. All right. So if you're watching this broadcast, let's go ahead and share it. We have with us. Oh, one more thing. Shout outs to RDP, Mr. Richard, RDP Networks. That's Mr. Richard Porteous. Don't want to mess that up again. Hey, Richie. Shout outs to him, man, for all your computer needs, whatever it is that you need in the software world or the hardware world when it comes to computers. He'll come and set you up. Alarm systems, security systems. He's the man to touch base with, Mr. Richard Porteous from RDP Networks. He's on Instagram. He's on Facebook as Richie, right? But he's on Instagram with RDP Network. So shout outs to Richie. All right, we have here our special guest today is Mr. Steve Nembhard.
Mm-hmm.
And
Steve.
And Mr. Nembhard is a tax accountant. I believe I have that correct, sir?
You're correct.
All right. And it's that time of year, isn't it?
It is. It's a fun time of the year for some of us and not so much fun for some of us.
Well, you're going to help us for the next few minutes. You're going to help us navigate that world, give us some information about it. Just to let you all know, of course, dollars and cents, we came on here during the pandemic. So 2020 was something new and different for a lot of us. And even for starters. So, this podcast here is something that came as a result of all the social unrest that we were facing during 2020. And we wanted to just highlight some things to the Black community. Of course, everyone can benefit. This is not limited just to Black folks, but, as Black folks, we wanted to empower the people. So that's who we are, Mr. Nembhard, and thank you once again for coming, man. And we're looking forward to the conversation that we're going to have.
Okay. Well, feel free as I go to stop me, interrupt me on the things we'll be touching on.
Yeah,
there's really a few things that I want to touch on. Some of them I know that they may be well known to some and not known to others.
mm-hmm.
That's just based on experience over the years as you meet with someone. There are a lot of I consider basic expense deductions and credits that someone can claim.
Mm-hmm.
And many people aren't aware of some of these things.
Mm-hmm.
So I want to touch on that. And there are also changes that are made for the 2020 tax year that are important for people to start paying attention to as they go to their preparers to get their tax returns completed.
Okay.
So some of the basic stuff that I make mention of, medical expenses, for example. There are many individuals that are not aware that they can claim medical expenses when they file their income tax return. So that would be whether you're paying for prescription drugs, you're paying for dentistry, you're paying for eyewear, and there are also some homeopathic expenses that you may be able to claim as well as medical expenses. Now, for the 2020 tax year, with the legalization of cannabis, the federal government is now allowing individuals to claim those expenses as part of their medical expenses.
What you saying?
That's correct. That's correct.
All right.
Now, a few years back, you would not be able to do that, but with the changes, now you can.
Yeah.
I think that's awesome. I think that's really one of the bigger ones.
I guess that's a good thing, I guess, you know.
I think Wade is a little surprised. He may start.
You're gonna start claiming?
You may start claiming. Yeah.
Oh my goodness.
Another expense that some people sometimes, they may have a family member assisting them. This is more for parents with children.
Mm-hmm.
They may have a family member assisting them to take care of the kids. Mom and dad is working. Grandma is assisting with the kids. And so because they're making the payment to grandma, they don't take that as a deduction. But if you add that income to grandma's income, it may not have an impact on grandma, but it will have a huge benefit to mom or dad. Now, childcare expenses normally taken by the person with the lower net income. So if you're claiming as husband and wife, the person who has the lower net income has to take that claim or that deduction. And so the focus is always on what the impact will be on the grandparent that is claiming it, whether or not it's going to affect their old age benefits or not. And so it's in their best interest to have that accountant or tax preparer work out what increase will affect the old age benefits. And if they can claim even 50% of it, it may be beneficial to them versus leaving that and claiming none of it. Okay, so that's another deduction that should be considered. Tuition fees. Most people are aware when it comes to tuition fees are fine, but I also realize that a lot of people are not aware that they can claim tuition expenses. So you have your kids, you go into school. Sometimes the child can take the deductions, sometimes they cannot. And so the student can transfer that credit or some of that credit, a portion of it, to the parent. And so the parent can take the claim, get the increased refund, and potentially pass some of that back on to the student or the child if they so wishes. Okay.
Okay.
Sorry, Keisha, go ahead.
No, I was saying, okay, that's interesting. Yeah.
Now, one of the big ones for this year as well relates to individuals that are purchasing home and first-time home buyers.
Mm-hmm.
So historically, the CRA would allow you to use $20,000 towards the purchase of a home without having that RSP that you're withdrawing being added to you as income. For this year, they've increased that number to $35,000. So in a situation where you have husband and wife and both have some monies in RSP, you can use up to $70,000 towards that home buyer program. Now, the program allows you 15 years to repay that money without having it added to income. Mm-hmm. So you get an exemption for the first 2 years. So if the withdrawal was made in, for example, in 2018, you would start your 15-year repayment as of 2020. If for any reason you miss a year or multiple years, that year that you miss gets added to income. Meaning, using hypothetical numbers, let's assume that your repayment should be $2,000 per year. If you do not put back that $2,000 in, then it gets added to you as income for that year you didn't put it in, and so on. Okay. Another one that has come out for this year is EI benefits for parents. there are parents, normally that would go on mat leave and they get some EI benefits and it becomes income or taxable. For this year, the government has removed the tax liability relating or associated with that income. So that now becomes tax-free income. So if your wife went on mat leave, she collects some mat benefits, she no longer has to declare it as income because that's now deemed tax-free income. For seniors, they have increased the old age security benefit. I think that number is up by about 15%. And I know that for many seniors that are staying in homes, it's a very expensive process for them because the cost of staying in these homes are very expensive, which in most cases is being subsidized by the kids and other family members. So that increase, I think, will be a big help for these seniors. There are a few other small changes that are made, but those I think are probably the bigger ones that are there.
Well, just before I ask my question here, just wanted to let the folks, the viewers, know that if they drop a comment in, we can see that, and we'll pass it on to Mr. Nembhard.
Mm-hmm.
You spoke about this year in terms of not necessarily this year, but as far as the filing taxes, and you highlighted like some new categories outside of the cannabis situation. Why did you mention those other things? Does it have anything to do with COVID or what we're dealing with right now as far as some of the adjustments that the government made? Or am I incorrect in understanding?
Some of the adjustments were as a result of COVID.
Okay.
So historically, you could claim, for example, your medical expenses. You could claim. Cannabis is introduced, I guess, because they legalize it.
Right.
What I didn't touch on that as well, they've also increased the limits or the amounts that you can claim, and that normally each year there are increases based on indexing, based on inflation. But some of this is also definitely based on COVID. 100% want to look at is the maternity benefit. That was introduced exclusively as a result of what's happening with COVID. Now, another one that just came to mind, relating to properties again. There are instances where someone may own a home, it's their principal residence, and at a later date, they buy a second home and they decide to rent the home they were living in. And it happens vice versa. They may be renting a home and decide to move into the rental property. Now, if you own the home and you decide you're going to rent it at a later date, from the date you decide to start renting it, you would need to determine an approximate ACV or cost value for that property. So essentially, what we're trying to do is look at how much capital gains you'll be able to claim. And if you don't follow what I'm saying, stop me at any time. So I'll touch on it again. So you're living in your home. Yeah. You decide you're going to sell the home. You decide you're going to rent the home and buy another home, a second. The home you were living in becomes a rental property. And when you sell this property, you need to have some capital gains or pay some capital gains for the time that you were renting this property. So if the reverse is true, where you were renting it and then move into the property, the CRA has taken the position that you no longer need to pay any capital gains tax until you actually sell that property. Wow. Okay. I don't know if you're following or if you guys are following me now.
Yes.
So
before you would have to pay the capital gains
once the change is made, you have to pay the capital gains tax. Right. And that's only if you go from principal residence to business or rental, you don't pay capital gains tax, but the reverse is true. But under the new rules, you no longer pay that capital gains tax until the property is sold. So that's deferred until the date of sale.
Yeah, because they're hoping that it will be worth more by then, so they get more capital gain.
Well, no, it's not that it's worth more. This is all a part of the COVID.
Okay.
As a result of COVID, they have made the decision to defer the tax liability. Instead of leaving the individual with that tax bill now, they'll leave it until you defer. They defer it until you sell the property. Now, you are correct. When you sell the property at a later date, it will be worth more. You will have some more money, one. And number two, the hope is that we're not going through COVID. So you're in a better position to pay the taxes at that point.
Right.
But if they're going to burden you to pay the taxes now, you're not selling the home, you're not making much income, then it's a bigger headache for individuals to deal with.
Sure.
Yeah.
Mhm.
Now, you mentioned the tuition fees, right? In terms of the ability to claim. That's for post-secondary, right?
Correct.
Just got to make, because we know we have viewers who have children in private school, but it's not post-secondary. So just to be clear that no, you can't claim that, you will get in trouble.
No.
It has to be post-secondary.
There are some claims that may be available for students in private school. Now, depending on the institution and how they're structured or how they're set up,
right,
they may give you either a child care deduction from the monies you pay them, or they give you a charitable donation receipt.
Right.
So if the organization is set up as a charitable organization, at the end of the year, a portion of it will be given to you by way of a tax receipt that you can deduct on your tax return. And sometimes you get a combination of both. You may get $2,000 for childcare, and you get $1,806 for a charitable donation. So it's all dependent on the structure of the organization and how they attribute or distribute their monies.
Right.
Yeah.
I know for the younger grades, like kindergarten and junior kindergarten, before grade 1, a portion of it is considered child care for companies.
We have a question here online. I for some reason, maybe it's because I'm not utilizing StreamYard properly, but it's not popping up here. But anyways, a question here that says, how about the furniture and electronics being bought for the kids who have to switch to virtual? Are those costs refundable?
The government is having talks about credits that they will be introducing for this tax year. I don't have all the details on that as yet, but I know there are talks where you will be able to deduct expenses that you've incurred for the purpose of online courses.
Okay.
Yeah. Now, generally speaking, if someone is doing post-secondary studies, sometimes it's a one-off. They do a professional development course somewhere. Those are also deductible, and this is something I find over the years that many people don't realize that they can take these deductions. What you need to ensure is that the cost of this course is in excess of $100. Once you are $100 and above, it's 100% deductible, and it has to relate to the work you're doing, or it's something you're looking to get into to be able to deduct it. Yeah.
Good to know. I do have a question with regards to the CERB funds that people were receiving based on the whole COVID situation. What are the pros and cons, I guess, tax-wise with regards to that? We started this podcast actually speaking about CERB and people thinking it's free money, but of course, some portion of it will have to be paid back. How does that reflect in this tax period?
Well, it's not a matter of paying it back. I think paying back will apply to individuals who do not qualify for the CERB. And I know that the government has already started that process of approaching individuals to do repayment. But for individuals that are eligible who have received the CERB, what they will receive is a tax slip at the end of the year. So they'll receive a T4A slip that says they receive X number, whatever the dollar values they receive as income, which they'll need to declare on their tax return and pay some taxes on it. So it's a matter of how much income they've earned before the CERB payment and having this additional amount added to their income pay tax on it. And I think the same is true with the exception of the mat leave EI payment that they are now exempt in. Most of these programs from the government, except for the loans as well that they're offering businesses, it's income that will have to be added to income at some point to pay some taxes.
Okay, and the government also rolled out the business loan as well. Is that still available? And how does that work where tax is concerned as well? How does that? I mean, of course, it's a benefit, but what are the guidelines with regards to paying that back as well?
Those, I think you're making reference to the $60,000. They initially introduced $40,000 as a loan. They've now increased that number to $60,000. Deadline for repayment is December of 2022. So individuals who receive those monies have until December of next year to pay back. Guidelines, you need to be either self-employed, so real estate professional is a good example, or individuals that's declaring self-employment income. And it doesn't have to be real estate agents. It could be a hairstylist, a barber, anyone can apply. The previous guideline asked that you have a Canadian bank account, a business bank account, as of March 1. Based on the latest update from the federal government, they've now eliminated that. So you can have an account that was open subsequent to March 1 and still be able to qualify. And again, someone applying for the first time would be able to apply for the $60,000 instead of the initial $40,000 that they initially was offering. Now, this being a loan, it doesn't impact your income at all. So there's no declaration that someone has to make to pay tax on that or add it to income.
Okay, good to know. Good to know. And is there anything else with regards to this tax period that taxpayers need to be aware of, or anything at all that's going to help them with regards to filing their taxes for the 2021 tax year?
One of the things I want to touch on as well, I've noticed over the last few years, quite a few people are adopting individuals. And there are expenses associated with adopting someone. And so those are expenses that can also be claimed on your tax return for a deduction when you file your tax return. Most people take the position that they've adopted. It's an expensive process, but they're not aware that they can take these deductions. So that's another area I'd like to highlight that should be considered. Another has to do with parents. So for those of us who have parents that may be receiving kind of pension, old age security, your parent may have worked for a company where they have accumulated a reasonable amount of wealth. So as they're receiving their benefits, there's something called clawback or social benefit repayment that many seniors encounter. And so this essentially is based on the income they receive throughout that year. The government has put in place a threshold where if your income goes above that threshold, you have to pay back a portion of the old age security. So this is something I think, speaking to your tax advisor on it, based on your parents' income, it can be planned around to minimize the tax liability that your parents may have to pay at a later date. Yeah.
You're muted, Wade.
You mean you haven't mastered reading lips yet?
No, not yet.
Okay, Steve, thanks for all for that information. You may have touched on this already, but just to reiterate, in terms of the CERB taxes, the taxes on the CERB amount, is that at your standard tax rate, or
there is no standard tax rate for it? it's really driven by the income of the individual.
Right.
So let's say you're in construction, and before the SERB payment, you already collect $50,000. Kenton is a real estate agent, and he already made $160,000. And so he wasn't working and collected some SERB. He's going to have a much bigger tax liability, even if both of you collected the same money. He's going to have a much bigger tax liability than you would. So it's based on the tax bracket the individual will fall into, determine how much they pay back.
Okay. Yeah, I think right. Okay. Yeah, so it's good for listeners, for individuals to know that. So it's just based on the tax bracket that the individual is in that you. So it's not tax free, and it's not free money.
No, it's not free money at all.
Is there such a thing?
Not with this government.
No, not at all.
Yeah.
So even with the SERB payment as well that people are receiving, that can put them in another tax bracket depending on how much they get, which can affect child tax benefit and stuff like that. Correct?
It could, but I think for the most part it won't, because most people collecting the SERB, they're not working, and so this becomes the only income they have. You know, the government have this base amount that everyone is exempted on some of the income that they earn. So if they're only earning or receiving the SERB benefit, especially if the individual have children, they have maybe other deductions or credits that they can claim, they may or may not be paying back taxes, depending on what the overall income is.
Sounds good. All right. Well, I mean, definitely we have a wealth of information. I think that we just put a link in there that kind of gives some update with regards to what's happening, some of the changes that's happening in tax land right now. And certainly, I mean, if you're watching a little bit later and you have any questions, then, you know, certainly you can always send those questions over. We can, you know, ask Mr. Nembhard, of course, to answer those questions, or if you need contact to him as well, it's tax season. Certainly we can direct you on that path as well. Do you guys have any other follow-up questions with regards to taxes at this time?
Yeah, I just need to know if he does taxes for individuals, and that's your business. And, you know, this is where we can promote your business, you know, that type of thing. You know, we'll be happy to do that.
Let us know all. Tax, of course, is let us know all the hats that you wear.
Yes.
Well, on the tax side, we do individuals, we do corporations, we do charities, whether it's a non-for-profit or non-profit or not-for-profit organizations as well. The various hats, it's so we get involved in we do the accounting work, definitely. We get involved in mortgages as well. I am also a licensed mortgage broker. I'm also a licensed financial advisor. So we can get into topics of life insurance, investments, and so on.
Okay.
Well, you just tapped into your blackness there, man. So we knew it. We knew it.
Well, you know, at a young age, I learned very early that multi-pillar is rather important. And so sometimes you listen to an individual speak and they'll tell you, you know, you're doing multiple things, you're a jack of many trades. But I take a different position. You don't go into Walmart to get clothing. You go to Walmart for grocery, you go to Walmart for many different products. And so I've learned that in order to be successful, you need to be able to adapt, and you need to be able to assist your clients on everything relating to what you're doing. So in our case, If a client comes to us on a mortgage topic, we're able to address it. If a client comes to us on an accounting or tax topic, we're able to address it. If a client comes to us on an investment topic, we're able to address it. It doesn't mean that an individual or another professional that's not dabbling or working in the different areas isn't doing a good job. Nor does it mean that we're overly stretched based on us being involved in different areas. But it means that we've educated ourselves where we can provide better advice to our clients. So if someone approaches us on something that we only focus on mortgage and they have a tax-related question, to send them somewhere else. But if we've educated ourselves on the different area, we've been licensed in the different areas, then we're in a better position to guide and advise the clients. And we're not just licensed, we're practicing this, we're doing this on an ongoing basis, on a daily basis, and keeping on top of what's happening so we can assist the clients as we go.
How long have you been doing this, Steve?
North of 20 years.
Okay.
Accounting is, I'm sorry?
No, I was just going to say that's a wealth of experience. Go ahead.
Yeah, accounting is where I started. I worked for a few CA firms before I started on my own.
Mm-hmm.
Then back in 2008, actually 2002, 2003, I got into mortgage, got my mortgage license. Back in 2008, I got my financial advisor license, and we moved forward accordingly.
Have you oh, sorry, Keisha, I saw you're trying to get a question.
I was gonna, please remember your point, Kenton, do you remember it? But
Yeah.
I wanted to draw out something that was very important that you mentioned when you were making that comparison to Walmart, with regards to going into Walmart and having a selection of, different things, whether it be clothing, grocery, electronics, right? And as we see right now, based on the fact that Walmart actually has all these different choices, or that food, all these different areas, they're the only ones in a lockdown right now that's open, right? So you go in there and you have access to all of these things, and they're the one that's making money right now. And I think we can draw a lot from that with regards to kind of putting ourselves in a position where we have the knowledge of different things, because when you go into Walmart right now, of course, you're able to, everywhere is locked. Somewhere that just sells clothes, they're locked right now. Somewhere that just sells electronics, they're locked right now. But you can go into Walmart, who has decided to cater to all these needs, and they're the ones that are now making money. So it's interesting comparison. I kind of pulled that out of that. Yeah.
You had a question there, Quentin.
No, in terms of your clientele, I just wanted to know, because we push it out to the Black community for what we do, not limited to, as I said. In terms of, is it a mixture you have? You have a lot of folks from our community. That's one. And number two, like, what are some of the things that you've encountered if dealing with our people that you'd want to get out there to sort of help them or help us to function better in what we do, especially in the financial arena?
The first part of the question, yes, it's across the board, Blacks, white, Chinese, Indians. I would say the mixture is probably 70% Black, and everybody else make up the rest.
Okay.
Now, what in advising individuals what to do, I think the area I would want to focus on, if I were to do that, is to look at wealth creation. Okay. I think the biggest challenge we face across the board is wealth creation, and the perception that society have for Black individuals or individuals of color. Yeah. So there are really small steps that we can take that will make a humongous difference. But it's making that commitment and being true and honest to ourselves and to who we're working with, in order for us to have some success and have great success. A simple topic that probably may be something you guys can consider at some point is life insurance. Now, most of us believe life insurance is a waste of money. And that's based on the way we were brought up.
Yeah.
Sometimes, mom will say, oh, it's a waste of money. I paid for 10 years and I got nothing out of it. But if mom was educated on the different types of life insurance, where she should put her money, how much she should buy, and why she's buying the insurance, it makes a difference. Mom may now buy a policy that will either give her back her money in the future or have some benefit. Now, the reason I touch on life insurance, I believe life insurance is one of the best wealth creators. Okay. And what I mean by that, we all know that at some point we have to go. Now, if you imagine that each of us, before we go, there's $1 million in life insurance that's going to be left for each child that you have. Or let's assume it's $1 million for all your children. So you have 2, 3, 5 children, doesn't matter how many. You now have $1 million for these kids. So when they become 18, they have that money is available for them. Or if they're already above 18, they have that money to give them the start or help them move forward. Now, it's not going to cost us a lot of money. As much as it may seem expensive, it's really not a lot of money. And I'll prove it. Assume Kenton is looking at insurance. Kenton says it's too much money. Wade comes along and says, Kenton, I need a few bucks. I need $3,000. Kenton is going to advance Wade that money. Now, later on, Keisha comes along and says, oh, I'm in a jam. I need to borrow $5,000. Kenton says, how long you need it? Oh, can I get 6 months? Can I have it for a year? Kenton advanced that money. You've now advanced $8,000. What would premium cost you for the next 2 or 3 years? You may or may not get that money back from Keisha and Wade.
Yes.
Right? And so now you would have put yourself in a position where you're protected. Because if death happened to knock at the door, what does the family get?
Right.
Now, if you had $500,000 worth of insurance and that money is paid out to your family members, now there's monies to cover final expenses and to pay off the mortgage and do other things. So
put them in a better position. Yeah.
It's one of the most important pieces that the Black community is not paying attention to. One of the most important.
Because the idea about insurance is that it's just too expensive or whatever. No, I said that's the idea. It's not the reality, because it ends up costing more, not just financially, but stress on the family that's left behind, and quality of life that they could live. So it's just it's a myth. A myth or a mindset that we need to change in our community, that insurance is necessary, because they say, oh, these insurance companies, and there are stories that are out there regarding insurance companies in terms of what they, or you hear the negative stories, but you don't always hear the positive stories.
Yeah. And we've had a positive story on here too, because remember we've covered insurance as well, leaving those funds for your loved ones. I've had clients that through death, unfortunately, loved ones have left them funds that they're now able to go and purchase a property. This is the position that it leaves you in, which can be a good position, right?
If I may touch on what Wade was just saying, there are our stories, but I think understanding what create these our stories. For example, in the insurance world, there are 2 ways the insurance companies will do their underwriting. So some will underwrite upfront, and some will underwrite at the time of payout. So if they're underwriting, if you buy a policy where the company is underwriting at the time of payout, that's when they're doing the check-in. Okay, so that's when they start looking at your medical records. Your doctor told you that you have prostate, for example. But when you talk to the insurance agent, you didn't tell the agent about that. So they can't disclose that to the insurance company. So when they're checking at a later date, when they're doing their underwriting at a later date, they now go back to your doctor and they look at the date you signed the contract with them. And they look at the doctor records to say, well, you were advised of this before you signed the contract and you didn't tell us. So therefore, we're not going to cover you because you lied to us for us to give you the rate that we gave you. If you had told us, we would have still given you insurance possibly, but you may be paying an extra $50 a month. The fact you lied to us, we're not giving you anything, we'll give you back the money you gave us for premium. So it's understanding these things and educating the clients that are purchasing the insurance so that they understand what they're doing, what they're walking into, and what to expect in the future.
Right.
Mm-hmm.
Have you seen an uptick in your business with COVID, or has it affected you on the downside?
Earlier in the year, towards middle towards the end of the year, our volume dropped substantially.
Okay.
Right now, things are ramping up tremendously. Insurance, I find over the last few days, week or two, I've been promoting the idea of insurance, and there isn't one person I talk to that doesn't want insurance.
Okay.
COVID is on a rampant,
right.
based on what we're being told. And so if someone contracts and someone dies, and let's assume that the individual that passed is the person that's earning the income or the breadwinner of the family, it's going to have a humongous impact, a very big impact on the rest of the family. So it's important to put some insurance in place, even if they're doing this temporarily.
Mm-hmm.
Put it in place until COVID passed. If you don't want to carry this insurance, you don't have to. So you can buy some term policy and ensure that if anything happened to the breadwinner, there's money to pay off the mortgage or money's left for the kids to take them through to university.
I know that you may not have a lot of information from March till now, since when COVID started, but in terms of, you said 70% of your clients are like people of color, right?
Yeah.
How has COVID affected them, if you have that information at all, or they're just lumped into the same category as everybody else?
Well, I think a lot of the clients we do work for a lot of guys that are into construction.
Right.
A large majority of them have slowed down, and we're not working through half of the year last year. There are quite a few clients I saw towards the end of the year that were not earning much of an income, and some of them earning nothing at all as a result of COVID. There are clients that are operating stores where some of them, their numbers have ticked up more than double. Right. There are clients in restaurants. Last year was the best year they've ever had, right, as a result of COVID. So depending on the business you're in, and the same is true, there are clients with restaurants that are struggling. And so based on their location, if you have a location where you are relying on commercial clients or persons that are working in corporate offices, you're close by, those businesses are hurting big time. Right. Because the individuals are now working remotely, and so they don't have the volume coming through the doors to give them the money to keep moving. So it varies across the board, really.
Okay.
Yeah, because with COVID, I know they're speaking to one business owner, and he said, man, COVID is the best thing that ever happened to him. Yeah. He has found quite a bit. Like this year, last year was like, it's really, really good.
Yeah.
So you have both ends of the spectrum where that's concerned.
Correct. There are many of our clients that are in that position today. Mm-hmm. I spoke to one client recently. They're looking at opening a second location. Wow. They're in Vancouver. Wow. Yeah. It's in the midst of COVID, and they're looking at opening a second location because of the volume that's coming through. All right. So depending on the business they're in.
I mean, I don't know if this is outside of your scope, but I'll throw it out there. We have a few minutes left. If anybody has any audience for Mr. Steve Nembhard, by all means, just drop it in the chat window, and we'll get it to him. Is there a particular business that you would counsel individuals to look into at this, whether this particular time or just in general?
I think if someone wants to get into business, I may have an idea or a suggestion, but I tend to favor focusing on what someone likes and what someone wants to do.
Right.
if I'm promoting what I believe to be a good and a profitable business, but you don't favor it, you don't like this business, you're not going to enjoy doing it.
No.
It's not doing any of us benefit. So I tend to look at what the individual like, the area they're looking to get into, and try to provide as best as I can the guidance.
In terms of advice to individuals, whether they're young people or parents, based on the field that you're in, what kind of advice would you give them in terms of getting into it, doing some of the things that you're doing, especially for our community, right?
The industry or industries that I'm in, they're all awesome.
Okay.
And they're all awesome for multiple reasons. Okay.
Keisha is like, yeah.
It's very true. It's good for multiple reasons. Okay. If I touch on accounting, for example,
right.
And actually, I'm gonna come back to the question you asked me earlier. A thought comes to mind on an area or an industry I would like to guide more of our people to. Accounting is something that is always needed, regardless of what the economy is doing, be it good or bad. During good times, businesses are doing well. They need people to do their books. Individuals are making money. They need the accountant to help them with taxes, or in some cases, show them how to minimize their tax liabilities. During downturn where the economy is not doing well, the individuals are running to the accountants for help. How do I save my business? How do I make some money? How do I do what I need to do to keep my business afloat? So accounting is an area that I think is very necessary and a very important area.
It's like a trade.
I'm sorry?
I was saying it's like a trade. It's almost like a
Yeah. Over the years, I recognize that clients will go to their financial advisors. The advisor asks them to do something or to invest in something or to buy something, but they'll come to the accountant first before they make that decision. So I think the clients are relying more on the advice of the accountant than they are on the advice of the advisor. Not that they doubt the advisor, but they want to make sure that there's no tax liability or tax consequence to what they're about to do. On the financial service side, it's very important. I think we as financial advisors can play a very big role in assisting people in our communities to make better decisions, invest in life insurance, invest some in mutual fund in the market, and more so in seg funds rather than mutual funds. In the event we have downturn in the market, seg funds will give you some guarantees on your monies that mutual fund won't give you. And on the part of real estate and mortgage brokering, that's another area that I think is absolutely important for us to pay closer attention to. And many of us aren't paying attention because, one, we think we don't qualify. Two, we think that the credit is no good, which is something that's plaguing the Black community. But even with bad credit, you can get into a house, you can buy a property, and you can make money from that property in the future. So let's assume Wade and Kenton decide to buy a property together. Both credit is not in the position it should be to walk into the bank. But you may have a secondary lender that will advance you the monies. You make enough money that you can carry this property and keep it moving. 3 years later, you bought the property for $600,000. 3 years later, the property is worth $750,000. You've made $150,000 in equity on that property. So let's assume you sell this property at that point, and you spend $50,000 to cover real estate costs, legal fees, and all the costs associated with selling the property. You now have $100,000 in your pocket. Now, the monies you're spending to carry may be slightly more than what it would be if you were at the bank. But the fact that you're able to manage this, you've now made $100,000. You know, and I've always made this comment that there's no one on the street saying, here's $2. So why are you going to walk away from $100,000? A lot of money.
Good things.
Right?
Yeah.
A lot of money. So it's a matter of putting yourself in that position. I don't believe individuals should wait until, in hope that the market is going to correct itself or things will change or the price will go down. It's not going to happen. COVID starts, real estate value took an uptick. And so if you go back to history, you look at 2008, for example, the same happened. If you go further back in history and you look at 1989, 1990, when we had that big recession, there's a big uptick. Now, back then, average house in Toronto, around $200,000. And I don't know if either of you gentlemen remember, you buy a house today for $200,000. Next week, you can sell it for $240,000, $250,000, whatever was happening in the market at that time.
I remember.
Yeah. So, you know, things went down for a little while and then it just took another uptick. Real estate is one of the best areas to pay attention to. Life insurance and real estate. Those are the two areas that if our community were to be given proper advice, proper guidance, and they're diligent in what they're doing, good, bad, or no credit, you can get in, you can get a property. And the important piece is to ensure that you're able to manage the payment. While you have the property, you can be cleaning up your credit report. And so you're paying at a premium for the first few months or the first year until you get things resolved. But during those months that you're paying at a premium, how much is a property appreciating? Substantial.
Yeah.
Right?
Yeah.
So it's definitely important for us to pay attention to those areas.
There's another area you said you wanted to touch on too, Steve. Something that came to mind about things that, was that what it was? Real estate? Things that we could get involved in?
I think it was.
May have been the real estate I was looking at. Yeah.
Yeah, that seems to be something that we keep hearing. Real estate.
It's well worth it.
Yes.
Well worth it.
Well,
the rate of growth, it's ridiculous. The year-over-year growth rate on value or value appreciation, it's really ridiculous.
Well, go ahead.
I have one question actually before we wrap up. We pulled an article, and in the article it said that in Canada we only actually have one. Was it 1 millionaire or 1 billionaire?
Billionaire.
Only one Black millionaire in Canada.
Billionaire.
What does that say to you? Billionaire? Yeah. What does that say to you, Steve, with regards to that? What are your thoughts, with regards to that?
And the name of that person, by the way, is
Let me guess. Hold on. Let's see if Steve can get.
If I can guess who he is?
Yes.
Or Mr. Chin?
Steve saw the same article.
No, I didn't see that article at all. But I know his position. I know what's happening with him. But I think many of us could be a little better off or a lot further ahead. Now, he was fortunate to be able to acquire what he has acquired. Most of us does not have the capacity to do that. So what we should be looking at is working within our means and within our capacity, what we're able to do. And even if it means some collaboration, which is also important, we need to have individuals of like minds who are able to work together where it's not going to, end up being a fight or some other negative activity going on. In order for us to help each other and lift each other up. But it is important in answering Keisha's question that we look more towards wealth appreciation, acquire as much as we can. So that as we get a little older, we get into our older years, one, we can live a more comfortable life. But in my mind, the more important piece is the next generation.
Yeah.
I believe we all need to create generational wealth.
Yeah.
I also strongly believe that the stigma that exists today, we're able to change it. The stigma that exists about Black folks, we're able to change it, and I don't think it's as difficult for us to change it. The piece I touch on with life insurance, that's one way. Again, if society now sees, and I'll touch on Black men in particular, a tremendous amount of Black men that are roaming around the city, and they're all millionaires. Now, the stigma of Black people coming to rob them and doing all this negative things are no longer going to be there. All right. So it's definitely an important piece. Now, my mind just went back to, I believe, what Keisha was asking about on one other piece that I wanted to touch on. She may have heard me comment on this. An area that I personally want to get into today, but I don't think it's going to happen anymore, is the area of law.
Okay.
I so would love to be a lawyer today. I truly do. I would love to be a lawyer, but the time to leave what I'm doing to go back to study, I don't know if I want to put that time out. Don't think I'll need a lot of time, but I think much on the go today to leave that to go study law. But I think it's rather important that we have more of our people studying and practicing law. It's really a tremendous area to look to.
All right. Thank you, Mr. Steve Nembhard, for being here and for sharing with us, all the different information around taxes and life advice as well, in terms of how we can develop and grow better as a community.
Yeah.
Wealth of experience, man, and we really, really appreciate it. You coming on Dollars and Cents. We are out of time, but we'll definitely have to get you back on here so you can share some of your 20 years of experience with us.
I'll be more than happy to come on.
Yes, sir.
I'll be more than happy.
Any parting words, Mr. Wade?
Pardon?
Any parting words?
It was good to have you. You probably said that already.
Yeah.
And yeah, it's a lot of information, and we look forward to seeing you again, because I just heard you promise to come back on, and so we look forward to having you when you come back. And we're gonna let me see, when is tax season? Tax season ends about March, so April. So in February, March, in the midst of it, we want to have you on if you can find time.
At that point, we'll do a half hour.
Yeah, exactly. I was looking to hear maybe about 20 minutes.
20 minutes to a half hour is good.
Yeah.
Oh my goodness.
Awesome. Well, as we always say, definitely, we are bringing knowledge and opportunity to those in our community.
Yes, and we're making sense of your dollars.
All right, folks. Thank you once again for watching, and we'll see you on next Thursday.
All right.
Thanks for having me on, guys.
All right.
Okay.
It was our pleasure.
Bye-bye.